Okay, folks, welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m., February the 11th, 2021. All right, what we're going to talk about today, obviously, pre-market activity. Big day yesterday. Finally, we saw a bit of a crack in the small and micro caps, to a lesser extent, the large caps, but the S&P 500 didn't do all that bad. Dow Jones closed up. So we'll talk about the pre-market activity. We'll talk about economic data, strategy a bit. Has this market begun to burst? We'll answer that question, so stick around. But before we get to the charts, I want to talk about our friends over at TrendSpider. TrendSpider is the next level in automated technical analysis. If you want an algorithm, here's your algorithm. Automate your grunt work, speed up your analysis, improve your accuracy, and reduce costly analytical mistakes. Use their backtesting to automate and find winning chart setups. Time your trades with precision using their alerts. They have a demo, 7-day free trial offer. And if you're a new member to the Contrarian Trader, silver or gold level member, don't forget, you get it for free. It's included with your membership. I believe in it very much. We use it a lot. We'll be using it today. So please sign up. If you're not using TrendSpider, you're missing an arrow in your quiver when you're trading against the big boys. So level the playing field. All right, so economic data today, kind of important, because it was important yesterday. Earnings season, by and large, is over. And yesterday, we had CPI data, which came out. And the market didn't like it. Matt Carter, good morning, YOLO. The data wasn't horrible, but it wasn't stock friendly. And today, what we're going to get are initial jobless claims. If you remember last week, we had good ADP numbers. Okay, frankly, in my book, horrible non-farm payrolls. But according to the market, okay, non-farm payrolls. But relative to the number of companies laying off employees, it was horrible. And we're going to get that data today on a weekly basis. Initial jobless claims. They're expecting 760,000 initial jobless claims. What was it last week? I think it was over 800,000 last week. Why can't I get back there? All right, anyway. It was like 800,000 last week. It wasn't a friendly number. So watch this number today. It matters. It truly matters. And Friday, consumer sentiment coming out. Important, not huge. Consumers have been paying off a lot of credit card debt. And I think that's the worst case scenario for this economy. They want people spending, and paying off credit card debt is not sexy to traders. They want them spending. So keep an eye on when that comes out. Oh, retail sales comes out next Wednesday. That's important. FOMC minutes from last month, important. Business inventories, important. That's an indication of whether or not you're having a build in inventories. Will companies need to slash prices to get rid of those inventories, et cetera, et cetera? Okay, so important day today. Every Thursday is. At one time, a year ago, it didn't matter. Now, extremely important. Every Thursday. Now, talking about, do we have a bubble? You can't use a daily chart to identify whether or not you have a bubble. You need to pull back at least a monthly chart. And no, I'm not going to call this a bubble yet. Is it a how do I put it? It's still early. Third sip of coffee. Is it a valuation bubble? It could be. Yeah. I mean, if earnings don't really start ramping up and playing catch up to where we are in terms of price of the market, yeah, there's a valuation bubble. But this chart here, monthly chart, Dow Jones, looks pretty good. We're not overbought on RSI. We're not overbought. Well, we were a little bit overbought on Stokes, but not horribly. Volume is horrendous. Horrendous. We're halfway through the month, nearly. Let's bring up SPX. Again, similar to the Dow Jones in that we're not extremely overbought as we were back here in January of 18. The froth came off, a little bit of a correction here and there, off to the races. It's a healthy chart. But again, volume is trending very, very low. Paul, good morning. Hey, Pac, top of the morning to you. Taking a look at the small caps. Small caps, I'm not going to say a bubble, but they're very, very, very extended. If I say very, very one more time, I'm going to smack myself. You can see here, relative to the 2 and 3 standard deviation Bollinger Bands, I mean, you can go back a multitude of years here, and you're not going to find this scenario. Let's go back. I've done this with members. Let's go back 25 years. You're not going to find this. Very extended, going back to what, 2000 to 2000. Relative to the 2 and 3 standard deviation Bollinger Bands, we're not supposed to be here. So this is ripe for a sell-off. And that's why I've been saying, I think that, the probability of a rotation out of small and micro caps, speaking of micro caps, let's bring up the IWC. I think that we could see a sector rotation out of these names into the larger caps. Micro caps are not quite a bubble, but they're knocking on the door. And I mean, we're short of the micro caps and small caps. But I'm not predicting a major crash. We shorted the small caps, or the micro caps, I should say, the other day due to the fact that we had RSI around 83, and we were overbought relative to the smaller caps, which were overbought, but not as bad. We shorted here, the micro caps, and then we got the outside reversal bar. So I think that we have more downside here. We could see retracement back down to 140, where there should be resistance. We'll see when we get there. Volume rose. And going short, this is what concerned me, was volume. Volume is still very good on the micro caps, whereas on the smaller caps, they weren't that. Volume was bad to the upside, as you can see here. Horrible, horrible volume when you're at all-time highs. So I think we could see retracement on both of these index. That's our take right now. I would not be putting on new big bull positions. You're seeing names like Tesla. Where's Tesla? I was just looking at this. Tesla really took it on the chin. You knew there was trouble in the air when we flashed this blue doji on the raindrop chart on the 25th of January. Ever since then, we've been wallowing, putting in lower highs, and now we're breaking support on Tesla. And we found a new support level. Does this hold? Not quite sure. There are some troubles over in China. So it's not looking good for Tesla. Weekly chart, barely hanging on by a thread. Am I going to short? No. I think I shorted Tesla once. I was in there for like a day, and I rarely do that, but I'm afraid of being short of Tesla. Okay. Let's go to the pre-market activity. WG shocker. Top of the morning to you. My Carter, I cleared a few positions the other day and booked profits. All the other stocks kept ripping after I sold, trying not to be all butthurt about it. How do you do, Bob? I could have doubled profits. How do I do what? Stay short or... All right, let's go to the pre-market activity. I'm going to start things off with a 4-hour chart. And I want to start with the dollar because yesterday it really didn't make a lot of sense what was going on. Not that I believe the CPI data, but most people do, even traders, professionals. Can't let it haunt you, pal. Can't let it haunt you. Yeah, woulda, shoulda, coulda. You know, you gotta compartmentalize sometimes. I've been there. I know what you're talking about. This, you know, I kind of might have made a part of my trading philosophy is that I don't hold out for top dollar. I just don't do it because many times you wait for that final penny, and you should have been out. You should have been lightening up. So don't beat yourself up. Yeah, Pat, I believe that in that theory of when you have liquidity and the market's ripping, you know, and your technicals are extended, first out, best out. You know, my dad taught me that saying many years ago. You know, when you have the opportunity and you're seeing signs that things are peaking out a bit, you know, go to cash, look for the next opportunity. And I try not to look back. And sure, the other times I wish I would have held, no doubt about it, man. There's no doubt about it. But you know, it's a psychological game, and we are our own worst enemies. I mean, you know, when I do one-to-one sessions with people, and especially new traders, you know, I need to tell them, you got to be humble, man. You need to be able to look in the mirror every single day and say, you are your own worst enemy. I am my own worst enemy. And go about your day. So, yeah, emotions, Pat. Yeah, they're public enemy number one, no doubt about it. So, moving on to the dollar. The dollar, I was kind of taken back yesterday with the CPI data, which was not horrible. And again, I don't believe the CPI data. I believe that it's a lot hotter. They showed it. Not energy prices. Food prices weren't as hot as expected. You know, that's BS. You know, we've gone over food prices. They're at multi-year highs. I go over the charts. So am I going to believe government rigged numbers, or am I going to believe the charts? I'm going to go with the charts. So the dollar took it on the chin yesterday. Gold sold off, which that made sense, but it rallied back. The dollar rallied back some. So I think there was a little bit of rationality that had hit the market late in the day. Now here's the chart of the dollar. We were in this trading range for a while, then we broke out. Gold took it on the chin, silver took it on the chin, and then we sold off. Yesterday and overnight, we're seeing some good price action here, but there is a negative. I'm going to pull back in a moment and show you the negative. RSI putting in higher lows and higher highs now. So we may get a rally on the dollar. Now the negative that I'm pointing to is that we could be setting up for a head and shoulders setup. Left shoulder in here, head, right shoulder forming. So the neckline is here. If we break, what is this, 90, let's go with 90 spot 2. We'll give it a little bit of room to be wrong. 90 spot 2. If we break that mark, we're coming down into the 80s, and I don't think we're coming back to the 90s for a long, long time, absent an event out of Europe, because they have their own issues right now. So with that observation, short-term bullish, longer-term bearish on the dollar, what's up with gold? Gold is not doing much here. Very lethargic. Silver. That's the SOV. Let's go to the futures. I think platinum and palladium. Let's stop here for a second. Yeah. Platinum hit multi-year highs overnight. Yep. Very nice. What's palladium doing? No breakout yet. This is looking very, very nice. This is a very close to, I won't say it is, but very close to a cup with handle setup. Here's your cup, handle, look for a breakout. No breakout yet. So I think that is going to break out. Here's silver. What are we doing today? 4-hour chart. We are breaking out of a 4-hour consolidation. So silver's looking good. Gold not so much. Moving on to equities. Russell 2000. I think we have a lower high here. You're not seeing that pre-market pump that they've been doing. They even did it yesterday before they sold it off. But I'll tell you, we had a price target. Let's go to TrendSpider really quick. And we nailed it. Here was the price target we were looking at as a bet that we're hitting the peak. We hit it yesterday, even exceeded it, and then we sold off. And the same thing was true on the micro caps. Right here. We came pennies away, and we reversed. And Russell is flat today, but I think that momentum that we had, this is a 15-minute time frame, let's go to a 4-hour, is certainly losing its steam. Let's take all this off. I think we're ready. I get very, very superstitious about taking off my trend lines when I'm waiting for a break. So I'm going to take some risk here. Clear all these off. There we go. And we're very close to either a breakout or a breakdown. One of the two. We're in the apex of a triangle formation on a 4-hour time frame. And there you have it. Lower high, potential. It's not a lower high and a breakdown until we break. But certainly under pressure, lower highs and RSI. So it's going in the direction we want it to. We just turned positive here. Let's go to the large caps. NASDAQ 100. Now, the NASDAQ 100 is looking constructive. I could have said the same thing about having a lower high here, but you can't now. It broke out. So we got to flip the switch here. This goes to support and resistance. Resistance, support. And we are breaking out. So the Qs are looking good today, and that kind of supports and validates our thoughts about sector rotation out of the small caps and micro caps into the safer, larger caps. We'll see if it holds. Don't forget the initial jobless claims today, 8:30 a.m. S&P 500. They're up about a 1/4 percentage point. We broke out overnight on a 4-hour time frame. Let's take a look at food prices for a moment, because corn came in yesterday. Let's see if we have a rebound. Before we do that, let's take a look at the VIX. VIX had a big day yesterday. Down this morning. All right. Food futures, blah, blah, blah. Still weak. I think this is a dead cat bounce. That could still come in here. I mean, these were on a tear, and then they released that CPI data, and it was all over. Wheat also took it on the chin. That really topped out. I can't really blame CPI here. It topped out back in January, and we've broken support now. So wheat is under pressure. I think that's good enough. Just wanted to get a feel for food prices, and that's going to weigh on gold potentially. Euro futures down slightly, lethargic. They may roll over here. Jury's out. Okay, Martin, you have a question. Hunter Group, ASA, ticker Hunt. They had a dividend of on February 2nd, but they pay out. So they paid a dividend of $1 on the 2nd of February, but the stock fell. The net asset value fell by $1. The market's pricing and the loss of that dollar valuation. I think I understand what you mean, but I think that's the outcome. You have a lot of people out there, and I've done it. I've done it with ExxonMobil. They play dividend capture, right? So all they do is they buy a stock on the ex-dividend day or around the ex-dividend day to be the owner of record so they can capture that dividend, and then they sell it. So it may not be a long-term thing, but they should fall on the day that they pay. Not necessarily, because remember, you have people that are in there, their sole business is dividend capture. So they're not going to stick around all that long. They're going to move on to the next ex-dividend day. So I'm not saying that that's exactly what happened here, but it's a theory. All right. Let's do some chart requests. Oh, very. Wayne, if you're watching this, which I'm sure you eventually will, one of your requests is blank. I do have W and Tilray, so we'll go over those. All right. W. Wayfair. Huh. Let's go to a weekly chart first. Daily chart doesn't look bad. It's definitely a consolidation. Here's new functionality on TrendSpider. I just got introduced to this. Insider buying and selling. Before we go over Wayfair, I want to share this with you. I'm going to bring up Facebook to show you how much Zuckerberg has been selling. Sandberg is selling. Actually, she had options that expired. She hasn't been selling. So really cool functionality. I'm just starting to play with this. They have a chart here. Here's the amount being sold, price action. So pretty cool. That's why Facebook hasn't gone anywhere in 8 months. Okay, W. I think we're in a consolidation. There you go. Automated trend lines. Validate it. Click of a button. Boom. Boom. Yeah, consolidation. I think it's a buy. You know, as long as you got the patience to stick it out. We're right near support. Use a stop right below 258. Check out seasonality. Going back to 2014, February is not a great month. Excuse me. But it's a great month to buy because then you go into buy at the lows. Because then you go into a multi-month uptrend in seasonality, and then it really drops off July through October. So seasonality-wise, it's looking friendly to buy in February in anticipation of a rally moving forward. So Wayfair, very interesting. Daily chart. We broke support yesterday, but it was on very thin volume. We did rally off the lows. We have a bit of resistance above, so if you really want to play it safe and not buy right here, and you want to buy on strength, the place to buy it is on a close above, let's call it $2.99 per share. But I think it can be bought here. Can nibble here, add more on a breakout. Wayfair, looking good. You just got to have patience with it. It's consolidating. Tilray. Monster, can't be bought. Connection. Hope this is working. All right, Tilray, weekly chart, very extended. We're trading above the third standard deviation Bollinger Band. Way too overbought for my taste. Now, of course, when I say that, it embarrasses me by showing a breakout on a daily time frame, but I would really need to see it hold this support level. It could trade sideways and take the froth off of the share price. If it breaks that support level, I wouldn't short it. But I would not buy it here. Too much risk, not enough reward. I love this. It's either got a hold or a buy, hold or a sell on it. That means that the potential for an upgrade is there. That's good tailwind for a headline risk. All right, so Tilray extended. I wouldn't buy it here. I would wait for the froth to come off. Let's revisit it. What time do we have? Trent, good morning. All right, we'll go for another 2 minutes. BHP. I like the big oil plays. So, monthly time frame, we have a breakout. I think they mostly do mining, BHP. Nice monthly breakout so far in the month. We have a lot of resistance above. Weekly chart. Good. Pullback here. And we're on the cusp of a breakout on BHP. Daily chart. We broke out yesterday, faded a little bit, but we had a breakout nonetheless. We have a blue doji formation that's flagged here. That's a sign of indecision. Last time we had that, we had breakout as well, but then we faded. So usually when you get one of these blue dojis, you get a trend reversal. So beware here. Be careful here. The short-term trend has been higher. We flashed a blue doji. That's a sign of indecision. So I would watch and wait to ensure that this is going to hold, the support level is going to hold and not fade. So give it a little bit of room. No reason to chase it here. Four-hour chart. Just curious. We may bounce around here at 69 bucks a share, in that range. So it looks good longer term. Shorter term, a little bit of a question mark, but I think net, it's bullish. Yeah, I can go over Hunt. I'm going to cut it off at that, though. Oh, Coke. Hold on. Coke. Coke is weak. You have a possible macro double top here. You know, if we start breaking support levels, and especially if we take out the lows of April of last year, this stock is done for a long time. I'm not saying that's going to happen, but we already have a lower high. All we need now is a lower low. And adios, Coke. They tried to rally it so far this month. Rejection at resistance. Again, the value of automated trend lines. Click of a button. Weekly chart. I don't like it. I think it's weak. You got a head and shoulders setup forming. Left shoulder, head, right shoulder. We break below the lows of October, which was at 47.30. We're going a lot lower. So I would tend to avoid Coke. Big reversal bar yesterday. It tried to put a rally together, and that's coming under pressure now. And you have a big volume shelf here at 50 bucks a share. I don't like it. Seasonality-wise, February neutral, but then we really pick up March, April. You know, these next couple of months, if they can't rally in March and April, if they can't rally Coke, they're not going to rally it. So just beware. If you're looking to short it, beware of the seasonality of the coming months. I would just avoid it. All right, Hunt, we'll leave off with that. Is this accurate? That symbol's not coming up. Sorry, pal. That symbol's not coming up. Martin. Oh, that's why. Norwegian stock. Okay. All right, folks. Please, everybody have a profitable trading day, and I will talk to you soon. Be well.